Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Russian minister has said that as of now, it is acceptable to them that 1 million barrel of an increase in supplies is something that they will go through.
It is a very timely and a right recommendation by the JMMC, which was voiced 2 days ago, and that is increasing production.
The government is now considering selling a significant stake in IDBI Bank to Life Insurance Corporation.
Post-deal, LIC should hold, may hold 51% stake in IDBI Bank.
The IDBI will now become, in some sense, a private bank with more than 50% out of government control.
Okay, lots happened over the weekend. Not too much, of course, market moving, but let's see how the markets react this Monday morning. Our market has been in a bit of a one step back, one step forward kind of trade. And it looks like, for starters, there would be one step back if you look at the SGX Nifty. This is Bazaar Morning Call. I am Anuj, with me, Surabhi and Reema. Good morning, both of you.
Good morning, Anuj. Good morning, Reema. A lot has happened, including Germany managing to avert near disaster, right, Anuj? How was your weekend with respect to sports? First up.
Oh, yes. I think the weekend was good. Nadal was #1 again, though that happened because Federer lost. Also because, as you said, Germany, as they say, never doubt the heart of a champion. And that's what
95th minute, they just managed to save themselves.
Yeah. From, they were 10 seconds away from being out of the World Cup, and now they could go all the way. That happens in sports, of course. And that's why we all love, we are also passionate about sports.
Which is why you labor through even the first 90 minutes, because you never know what happens.
Exactly.
Labor's the wrong word. Right. But, you're hooked on to the screen the entire time, because 1 second changes it. It could be the last
absolutely.
second.
I think this is already turning out to be the best World Cup that I've watched, without a doubt. And, we are not even, through the first half or first group stage. Let's see. But I think we have to discuss markets now, because we are in for a really interesting day today.
Yeah, so I am still wondering when the 95th minute for the Nifty and the Sensex is going to happen, because we spent the entire last week, Anuj, struggling and laboring through almost just a 100-point range. As you see the setup this morning, does it look like we'll get that breakout?
Surabhi, you remember on Friday when we were doing closing bell, we made this point that don't get too excited by this breakout. The breakout is there, but the last 3 or 4 days, if you thought any day there's a breakdown or a breakout, the next day the market has had something else up its sleeve. Just look at what happened last week. Monday we were down about 18 points. Tuesday we were down about 89 points. Wednesday we were up about 62 points. Thursday we were down 31 points. Friday we were up 81 points. All of that means sum total of 5 points. So, in between there were days when you thought, the market's breaking out. In between there were days that you felt, okay, there's a bit of a despair, but none of that happened. If you're a positional trader, basically you got nothing out of the market all through last week. This is a consolidating market, and the band is getting narrower and narrower. The 20-day moving average is moving up, while on the way up, 10,850, 860 is well-defined top. That was the closing high for the market. You need to take that out. Today, if the start is lower, perhaps buy on dips could emerge. That could be interesting. That's something that I'll watch out for. So the good trade is to sell the rallies and buy the dips in this band. That's been working. The Bank Nifty, though, is strong because of HDFC Bank and ICICI Bank both outperforming. And that is at the cusp of a new high, within 3% of new high. The other point is, on Friday, while the market was strong, it's once again narrow. The advanced decline was in favor of declines, even in Friday's breakout. So right now, the good trade is, as I said, to perhaps wait for the market to test the boundaries and see if that boundary test is failing, and then get on the reverse side of that trade, because that's been the market's verdict, and you're making a lot of money by doing that.
Before, Anuj, we talk to you about what next and what's the strategy that perhaps retail can adopt. I just want to place the cues on the table, though all kinds of cues have not moved this market in the last 5-10 days. But for what it's worth, right now you're seeing a little bit of red across the Asian screens. The sort of the tariff talk and those tweets, they're still continuing from the US president. So that's something that markets will perhaps keep on board, because that's what last week was all about. And then obviously we're talking about oil and the final fallout from the OPEC meeting as well, because there's been some confusion. There was a near 3.5% rally on Brent on Friday because the market heaved a sigh of relief that this production increase is in step with what was anticipated, about 1 million barrels per day. But there are questions on the timeline. Can they do it immediately or not? So therefore, there was that relief rally. Some of that has been undone because oil is down almost 2% thereabouts this morning at around 74. And then, of course, the tweets keep coming. I mean, that's been happening through the weekend. Threats about imposing more tariff sanctions, quote unquote, on European cars and tit for tat kind of the tariff rhetoric is still taking place. So, Anuj, in this context, what is the strategy now for our market? Does all of this add up to anything at all?
No, I think crude is important because let's see how that shapes up. On Friday, we sort of priced in around 74. I think we were there. In between, you've had a rally and have gone back, but the market cares about the level. Level is 74. So I think that way it's important that we are 74.
All right, and closer home, rain has returned to the city, so that is a positive. And we've also got the futures and options expiry to contend with. So, Anuj, you indicated that the near term one should play the range. What about over the medium term, the positional changes we should make to our portfolio?
Yeah, I think, Reema, it's been my, positioning for some time now that 2018 is going to be a year in which you either take day trades or you make a good portfolio and then, you stick through that. And you see the market volatility. As I said, the positional trade for a week or 2 weeks is not working because all you're getting is 5 or 10 points on the Nifty. So either you trade these boundaries or you make a portfolio of 8 to 10 stocks. If in this market also, if your portfolio would have been, the bear-proof stocks, the HDFC twins, the Bajaj twins, the Reliances of the world, you would have beaten the market handsomely. Of course, this is hindsight, but the market has given you enough indication that this year expensive stocks are going to become more expensive and cheap stocks or value stocks are going to get even more value. So that way, that dichotomy is very clear. This is a year in which your primary aim has to be saving the money that you made in 2017 because 2017 was such a great year for equities. So you've got to save that and then perhaps at the end of the year or at the start of 2019, once again the market will give you those opportunities.
And finally, I think another interesting development over the weekend. I think Deepak Shenoy put it best in his tweet. He said, forget about your money back policy from LIC. Now it's money to buy a bank policy from LIC. That's again a shocker. And I think we'll go through the motions and figure out the market's verdict on it. But I mean, suddenly LIC is going to be owning a bank.
It's not the first time it's happened that LIC is being used. It's not going to be the last time. And, you've absorbed that in the past. The market will absorb it now.
All right. Well, let's get going. Obviously, that's a big story that we're going to focus on as we go forward. But first up, quick take from the wise experts as we get set for trade this Monday morning. Sanjeev Prasad of Kotak Institutional Equities says that India has been so far largely unaffected by rising trade tensions between the US and its major trading partners. However, he says India runs large trade surpluses with the US in both goods and services. He says Indian IT and pharmaceutical exports to the US could be sitting ducks if the US administration were to focus on the large India-US trade imbalance. He says these sectors are incidentally the current market favorites, given concerns about global trade and a weak domestic macro. So a bit of a warning call there from Kotak on the two of the market's beloved sectors.
Okay, let's get you some money market views as well. Pramit Brahmabhat of Veracity says weakening of USD globally will help the rupee appreciate for the day. He expects the spot USD INR pair to trade in a range of 67.5 to 68 for the dollar.
Ajay Mangnolia of Edelweiss says crude prices rose following the OPEC meeting, but the assurance of higher supply by Saudi Arabia and Russia might keep prices in check, which bodes well for domestic bonds. He says as a result, gilts are expected to regain the positive trajectory after the initial volatility in response to crude price movements. He says oil and currency will continue to provide cues for yields in the absence of major near-term domestic triggers. Ajay says the 10-year benchmark bond yield is likely to trade in a band of 7.76 to 7.86% today.
And now it's over to Ekta for the World View.
Hi, thanks for that. Well, I'll start with the biggest cue that all of us were watching over the weekend and Manisha, which was the OPEC meet, where OPEC has in fact agreed to a modest increase in output, though there was some up and down. You can see that Brent crude prices had hit an intraday high of $75.5, but it is off that high. So currently just about within that range of 73 to 74. So no real huge cues which came in terms of dramatic moves for oil prices post the OPEC meet. Now, in terms of the the US markets, they snapped that 8-day losing streak that we saw all these days. So they closed in the green. We had energy shares on account of the OPEC meet, which really gained. So something like a Chevron and Exxon were amongst the best performing stocks in the US on Friday. In terms of the European markets, they closed with gains as well. Again, the oil and gas index really led from the front along with the banking stocks. So it was up 3.1%. Auto stocks were under pressure on fears of what Trump could do with regards to those. And in terms of other global cues, we had the US 10-year, which was at 2.9%, and the Turkey elections, which were in focus. Asia, mostly weak this morning. SGX is also indicating that it could be a start in the red.
Okay, Ekta, thanks a lot for that. Well, of course, over the weekend, the big development was what happened on that OPEC meet. Brent crude went to 75.5 and is now back to 74. So much has not changed from Friday for us. In between, there was some volatility. David Lennox of Fat Profit is with us now. David, good morning. So your thoughts on the market's reaction?
Oh, look, certainly if you have a look, and sorry, good morning. If you have a look at the market reaction, you'd have to suggest that, yes, it was in fact caught a little bit by surprise by the compromise that OPEC had made. We did see the Saudis at one end of the production equation looking for about a 1.5 million increase in production, and of course the Iranians at the other end looking for no production increase at all. So we've got somewhere in between at about 800 to 1 million barrels with a moderate increase over the coming months ahead. So that did see the Brent price rally quite strongly, and the WTI price followed. But now, of course, we are starting to settle back in to look at the actual detail. And we do think over the course of the coming months, one of the key factors that OPEC said they were increasing production for was because of expected higher demand. Well, at this point in time, yes, we are looking for higher demand to come through, but anecdotal evidence is telling us that it's just not quite coming yet. So we're going to have to watch that very closely. And I think with that, we've seen a retracement of the Brent price. You've also got to remember that not that long ago, the Brent price was up over the $77 mark. So the talk of the OPEC increasing production's done the job primarily, and now we're starting to see reality set in. And of course, the price has fallen back from those high 77 regions.
So, David, as you're saying, you're expecting about 800,000 to about 1 million barrels to gradually come into the market. What does that mean for prices? Will we continue to see Brent in this region of 70 to 74?
Look, well, what we've seen happen is, yes, the Brent price has come off, and in fact, the premium that we were talking about not that long ago of over $9 between Brent and WTI has in fact closed up by a couple of dollars. So we would be expecting to see, as OPEC does lift that production, it will lift at a faster rate than we've seen WTI increasing week on week in terms of through domestic production out of the US. So we would expect to see that premium closing in. So overall, Latha, we've kept our end of year target for Brent at $74 to $84. We haven't moved it despite all the events that we've seen over the course of the last month, and certainly this weekend. We think that we will see OPEC probably take the last of any action very late in 2018 to perhaps look at that ceiling number again. But at this point in time, we're not expecting any further action, and we're only looking for demand to now start coming into the equation as OPEC is expecting, and we will see the prices just gradually moderate on the upside from here.
Okay, so focus shifts from supply to oil demand now and the way forward there. David, with this commitment by OPEC as well as its allies to increase the supply, how does it change the deficit supply situation in the oil market? Do we now move into a situation where there is oil surplus, which could keep the prices capped?
If you have a look at the last figures that we got from OPEC, they indicated that the market was already in a small surplus of about 100,000 barrels. So by adding an extra 800 to 1 million, we will continue to see that surplus, in fact, in the market grow. So one would suggest that if that's the case, we will be seeing a softer oil price. However, as I've already said, OPEC are suggesting that there's going to be an increase in demand coming through, so that should soak up any increases out of the production that we've just seen being bought in. If that doesn't happen, then yes, you can expect to see the oil price weaken. So we are now watching very closely this coming drive season in the US. It's going to be a key pointer to which direction demand is heading. And of course, we'll be watching very closely demand out of China. That has been running relatively strong. So if those two events do occur, strong US drive season, continued strong imports, then we will see the oil price, as I say, probably moderate to the upside.
Okay, all right, David, we'll leave it on that note. Thanks very much for joining in and giving us your view on the trajectory of oil prices. They're still retaining their target of 74 to 84 on Brent. We have to take a break, but as we do that, here's a quick programming reminder. Our special series, Hunting for Value, will focus on a stock today which has lost nearly 26% from its 52-week high. This metal stock has been melting. Can it now steal up? Is it a value pick or is it a bit of a trap? Catch the analysis coming up at 9:50 this morning. So you do have some red on the screen across Asia. We've been telling you that, including the SGX Nifty, which is down about 50-odd points for the time being. So let's see if that's going to cap the upside once again for this market. Right now, it is time to boil it down to individual stocks that you need to watch out for. Our entire team is standing by with the list of today's top 10. Guys, good morning. Anuj, as always, I'm going to start with you. What's on your radar today?
So, Surabhi, last week we had flagged off United Spirits. And I think this stock continues to make some big technical crossovers. And there was massive delivery buying on Friday. Now, this morning, there's news, of course, that Rajasthan has put an additional cess on liquor. So that perhaps could lead to weak opening for liquor stocks. But I won't be surprised if that's bought into, because it's a very strong stock. The other one is Punjab National Bank. It's a very weak bank, a very weak stock. Continues to see delivery selling. Weakest stock among the weaker pack, the PSU bank. So that, of course, today, if the market is weak, could be an interesting one to see.
Okay, and the stock of the day could very well be IDBI Bank, as the government considers roping in LIC to capitalize IDBI Bank and transfer perhaps a majority stake over there. Sapna joins in with more on that.
Hi, morning. So as we have picked up, basically the plan here is to give clear ownership rights to LIC and IDBI Bank. This is a sense that we have gathered, at least till now. If there's a change in plan, well, we'll have to wait and watch and see how that really pans out. But we're given to understand that LIC, will be picking up 51% stake in IDBI, all put together. The question here also is that, whether a 51% buyout of the government shareholding looks difficult because, they already hold a certain percentage of the bank. In fact, LIC does that in almost all PSU banks. You talk of OBC, Andhra Bank, Punjab and Sindh Bank, State Bank of India, Bank of Baroda, everywhere they have substantial, significant stakes in other PSBs also. So having said that, we are also given to understand that probably this financial year, the requirement for capital infusion for IDBI Bank was to the tune of around 18,000 odd crores. Obviously, that will be a kind of a saving for the government. We understand that probably the proposal has gone back to the LIC board. Some certain queries have been raised by IRDA, also on the 15% investment cap norm. So things are in the pipeline, and a likely announcement is, maybe due according to government any day. But we have to see how the regulatory, framework really works out on this front.
Okay, it's definitely going to be a stock on the radar. Thanks, Apna, for those details today. Well, Tata Motors on Friday held a meeting for, bevy of its investors. Rima, what were the takeaways?
Well, first ever investor day for JLR. They've given us the medium-term outlook. So they've indicated that the volumes for JLR will grow faster than the premium industry over the medium term. They are guiding the premium industry to grow by just 2.6% over the coming few years. They're looking to keep their EBIT margins in a range of 4 to 7% versus their FY18 margins of 4.2%. And they're also looking to invest very heavily into capex. So $4.5 billion of an annual capex guidance given from FY19 to 21. So the improvement in margins is a positive, but this investment in capex will improve their product launches, but it will put pressure on their cash flows.
Oh yes, keep in mind for today also that if you saw on Friday the European car maker stocks were down quite a bit, so that's a bit of a headwind. Let's see how the stock reacts. Ekta, why are you watching out for Biocon?
Well, they've received an EIR establishment inspection report for their sterile facility in Bangalore. So this is positive news. They had this pre-approval inspection, which was actually for one of their biosimilars, pegfilgrastim, in April-May. They had received 7 observations, but now with the EIR, it stands closed. We already knew that because they wouldn't have got approval for the biosimilar if the US FDA did have problems with that plan. So expect the stock to be in the green in any case.
Okay, Ekta, thanks so much for that. So Biocon is on our radar as well. And more bank news, not just IDBI Bank, also watch out for ICICI Bank. Now, what has happened is that there was one more complaint of sorts that was revealed, and we have the management's response on it. So it's going to be part of the entire investigation that's anyway underway. Sonal has more details on this one. Morning, Sonal.
Morning. ICICI Bank, like you know, there was a complaint by a whistleblower around some irregularities regarding accounting of 31 accounts. ICICI has come out and clarified that the provisioning was done by end of December 31, and therefore the books as on March reflect the true picture. But given that this is not going away, there's continuous news flow around this, it's likely that ICICI Bank might be in the red today. The other stock in the news is PNB Housing Finance. There are newspaper reports that we have not been able to confirm about HDFC Limited and Kotak Mahindra Bank likely to be looking at acquiring the company a controlling stake for about 6,000 crore. Given that the stock could move to stronger hands, this should be positive for PNB Housing Finance, so likely to be in the green.
All right, Sonal, thank you very much for that. For ICICI Bank, this would be the 3rd whistleblower complaint since 2016. But let's now go across to Manisha to get us more on crude. Manisha?
Well, thank you so much for that. It has been all over the place. We saw 3.5% gains for Brent, 5.7% gains for the US crude oil prices on Friday, and that really seems to be coming off Monday morning right now. Well, the markets do believe that the 1 million barrel per day of an increase clearly is on paper. Many of the OPEC countries like Iran, Venezuela, Nigeria, etc. feel that the increase in production will be anywhere between 4 lakh barrels to 8 lakh barrels on the higher side, and that too perhaps wouldn't come all on 1st of July itself, because not many of the OPEC countries are in a position to increase production immediately, and Saudi Arabia actually cannot take most of that production on ground, because that would create a backlash then. So there is a lot of ifs and buts. We don't have individual quota. We don't have on how much actual increase will we see, and that really seems to be tampering the crude oil prices gains.
Okay, thanks Manisha so much for that. And we're back to Ekta. Ekta, is it going to happen today or not? This Fortis board meeting and results.
Well, it should happen today because it's been delayed before. And remember, there's a new board in place. So the Q4 and FY18 numbers will be released today. And we are expecting the Luthra and Luthra report to get released as well. But interestingly, the bidders are already, or the lawyers have already been briefed as per our sources with regards to the particular report. So it'll be interesting to see what the final bids would be like post the numbers and post the Luthra and Luthra report that comes out today. Expect the stock to be in the red ahead of these developments.
All right, Ekta, thank you very much for that. A quick recap then of the top stocks that you need to have on your radar this Monday morning. The stocks which are expected to gain include United Spirits, IDBI Bank, Tata Motors, Biocon, PNB Housing Finance, oil marketing companies like BPCL as well as IOC. The stocks which could be under pressure today are ICICI Bank, PNB as well as Fortis Healthcare.
All right, on that note, we will take a quick break. On the other side, our technical experts joining in, Sudarshan Sukhani, Prakash Gaba, as well as Rajat, both with us to take us through today's calls and trading ideas.